Okay, guys, we are entering into the first full week of July. Summer is in full swing, and this is episode number 15 of FedWatch. This one's titled PPP Abuse from Altcoins and Global Savings Rate. We have a lot of great topics here, really great rundown covering what the Fed's doing, what's happening globally, and of course, Bitcoin. Before we get into the show, I want to talk about Bisq. Bisq is a really cool platform. You just download the software and it essentially helps you coordinate buying and selling of Bitcoin. There's no sign up. There's no sort of identification. You just run the software and it helps you coordinate those trades. Probably one of the most private ways that you can purchase Bitcoin with fiat and a lot of other options as well. It's available worldwide, and I've used it several times. It's not hard at all. So don't be intimidated by running Bisq and trying it out. And if you're a seller, there's definitely ways to make a decent premium on Bisq. There definitely is a slight premium just because these coins are not going through a KYC exchange and that kind of thing. I think it's fair to expect that, but some people would say that privacy is worth the premium for sure. So if you want privacy with your purchasing of Bitcoin, check out Bisq, download the Bisq software. They have a great community and highly recommend them. Second, want to talk about Bitcoin at 2021. Bitcoin Magazine puts on the Bitcoin conference every single year. Unfortunately, Bitcoin 2020, due to all the COVID craziness, had to be postponed, and now we're just turning our focuses to next year. The conference is moving to LA. It's going to be happening the weekend of April 30th. And Tony Hawk, Nick Szabo, and a lot of the other speakers that were supposed to be speaking at Bitcoin 2020 have already agreed to move over to the Bitcoin 2021 conference. Go to b.tc/conference to check it out, or just Google Bitcoin 2021 conference. It's also at the Bitcoin Conf on Twitter. So check that out. Get your tickets. We're going to be putting out a lot more updates, as well as announcing more speakers and sponsors soon. So excited to continue to talk about the Bitcoin conference over the next few months here. Let's get into the show. Ansel, how's it going, man?
Good, man. I had something to say about Bisq and the premiums there too. I mean, fungibility is going to have a premium. If you mix your coins with Wasabi or whatever, you're going to incur a lot of fees, right? And fungibility, no matter what, is going to be more expensive. So Bisq might have a little bit of a premium, but they offer more privacy, and so that's why you pay a little premium.
Yeah, no, definitely. And again, Bisq makes it super easy. So no matter what, if you're trying to get private coins, it's going to cost you either upfront or through mixing or other techniques. So Bisq is one of the easiest, safest ways to do it. So definitely check them out. We got a jam-packed show for you. First thing here is a lot of altcoin ICO pumping companies have abused the payment protection plan money that the U.S. government has been issuing to companies. Do you want to get into this, Ansel?
People have probably seen this by now, that there were, how many companies did it say in the article? I had to bring that article back up now. 40 companies in the blockchain and cryptocurrency industry collected at least $18 million in payroll loans from the U.S. government. So that's a lot of companies. Now, not all of them are scams. Some legitimate companies got some help, right? But what I think is really bad about this whole thing was the companies that have tokens. So Zcash, Consensus isn't necessarily Ethereum, but it pretty much is. Tron, Cardano, a lot of these players, they got millions of dollars, and now all of a sudden their coins are pumping. I think there's a little, it doesn't take the smartest person to understand that they got the money and they either put it into marketing or they put it into buying their tokens. The best marketing for these coins is just number go up, right? So they could have just bought their coins. I think this is rife for corruption. What's your take?
I think that this is a perfect example of what happens when the government is in charge of allocating and reallocating resources and assets. So they get misallocated, and here we go. We have ADA pumping. 40% in like 3 or 4 days, as well as Charles Hoskins, acting really weird online and making a bunch of vlogs, accusing people of stuff and saying he's being silenced and do you know who I am and stuff like that.
Oh man, that guy is so classic. I mean, he is one of the best scammers in the space. I think it was Mr. Hoddle way back a couple years back. He had a poll on Twitter, who was the best scammer in the space? And, it was Vitalik, or it was Dan Larimer, or, he had a bunch of these like well-known scammers. But Hoskinson's got out of that because he is so good that people don't even realize that he is a scammer. But he has been foundational in a lot of these scams in the space. So, yeah.
I don't think we need to spend too much time on this, but
okay,
just pointing it out.
Yeah, sorry. One thing, and yeah, that's my own personal opinion on this whole thing. But one of the money quotes here in this article, which we'll link in the show notes, was from a Silicon Valley investor. They're not named, but they said, quote, "Every fund has been telling their startups to apply for this PPP." So again, it's corruption. These big funds that are investing in these projects and these tokens, they're using the government to pump their investments. And it's just a really bad look, I think, for the space.
The underlying storyline with all of this stuff is there's always going to be misallocation of capital when the government is distributing these funds. And there's always going to be arbitrary rules that benefit one group over another. So in this case, companies that can afford lawyers and accountants to and make a case that they're being hurt by coronavirus, they're going to get the money. That's just it. And pretty much everyone, has been hurt by coronavirus. So now it's just who can do the paperwork the most efficiently and effectively to get a loan. Next is UBI. So we've been hearing the idea of UBI first kind of enter the Overton window, and then now is like not only a subject that we can actually talk about, but it's something that is being considered more and more and experimented seriously. Let's talk about this open letter.
Again, just searching the internet, found this. We'll link to the PDF for this one, but it's an open letter from 156 economists from places like Harvard University, Northwestern University, Berkeley, USC. I mean, all the big names for big universities around the United States, and they're all calling for policymakers. Here, I'll read the first sentence. "We urge policymakers to use all the tools at their disposal to avoid further preventable harm to people and the economy, including recurring direct stimulus payments lasting until the economy recovers." Now, we knew this has been talked about, but I thought it was pretty significant that it came from a large group of economists, some well-known economists that are calling on the government to do this.
Yeah, I mean, again, it's coming from the institutions that people in the Bitcoin space may kind of look at and call them corrupt as it is, right? So, these top universities that are really beneficiaries of the existing system, these are also the people that are working for the Fed, that are working in policy, and they're recommending this now. And it seems as though, full Republican White House, mostly Republican Senate, like they're going to continue doing UBI, and it sounds like Trump announced that there's going to be another check. Is that correct?
Yeah, I just saw that headline today that they were said it's coming, but there's some confusion over exactly what it is. I heard it was if people made under $40,000 a year, they were going to get a full check, but if they made over that, there was going to be like a graduated scale. But that could have been last week's news, and now it's all new. Maybe everyone's getting a full check. I don't know.
It's just going to be interesting to see that shake out. I'll take the check. Hey, I'm going to buy Bitcoin with it, so I'll pump my coin with the government stimulus.
Yeah, but to your point, it's become normal now, and that's really scary, right? The Republican that's supposed to be at least somewhat fiscally responsible is cheering about sending out these UBI checks to people. And like this letter shows, the entire kind of profession, economic profession, is getting behind this, which just a few years ago nobody would have believed that. It's picking up pace, don't you think? It's getting faster and faster, and There has to be some sort of inflection point soon.
Honestly, like this idea of MMT and full-blown money printing could be the next step. And while that seems insane, crazier things have happened. And once something kind of enters the Overton window, it seems to like if it's justified or if there's enough fear, like it could happen. I mean, speaking of, money printing or lack of money printing, next is this NY Fed trading desk is seeing improvement and may stop purchases entirely. Do you want to get into the details on this?
Yeah, so this was a Zero Hedge article that just came out today, and so it popped up on my radar, and I thought it was pretty good because it has several things in here. First off, the balance sheet of the Fed is slightly decreasing, even though they're still doing about $75-80 billion a month in QE. Their balance sheet is actually slightly decreasing, if you can believe it. Let's see what else. This is the head of the New York Fed's trading desk. So pretty much the guy that does the open market operations. What's his name? I'm looking for it here. Singh is his last name. I can't pronounce his first name. I think it starts with a K, but he had a good quote in here. And he says, if market conditions continue to improve, Fed purchases could slow further, potentially reaching very low levels or stopping entirely. That kind of caused a little bit of a taper tantrum on Wall Street when this was published.
You're saying that stock prices reacted immediately downwards?
Yeah, slightly. There was a slight sell-off this morning when this quote got out there.
Yeah, I don't know. They picked right back up. So I don't know. They came in real big into the repo markets, and it wasn't even fully needed, and that activity slowed down pretty significantly. And then with these ETF and bond purchases, like you pointed out a couple episodes ago, they never did that much, but the market just reacted to the news. I think the next piece here in macro, talking about savings rate, we'll get into what I think is the crux of like why all these assets are going up, but ultimately they weren't doing that much. It seems every crisis, the Fed talks more than they do, and then they do after they talk type of a situation. It seems like the Fed, or at least the Fed put, is just something that everyone believes in. And when the Fed talks, the market reacts to that and just, sees it as true.
Yeah, this article calls it a catch-22, and they mention it multiple times. I don't think there is a catch-22, and I just want to read through this real quick and see what's your take. The worse things get economically, the better it is for markets, as the Fed will intervene even more aggressively, and vice versa. The stronger the economy, the tighter the financial conditions will get. They think this is a catch-22. But I don't think so. If you flip it on its head, right, that the Fed is actually not doing anything. The Fed is just following and trying to preserve some confidence in the market. Then it all makes sense.
I think maybe the belief in the Fed put is also belief in this catch-22. What you're saying is that everything that's happening is still free market no matter what. It's just, the Fed is acting as if, they're steering the ship, but they're really just doing stuff and reacting to what the market is doing. Is that correct?
Yeah, exactly. And his quote says that if market conditions continue to improve, then the Fed will do this. So they are admitting that they are following. They're following the market. They're not moving the market. They're kind of maintaining their Fed put, maintaining the illusion. But anyway, we can move on to macro now if you want.
Yeah, let's do that. I don't have much else to say there. But what I am interested in is, increased savings rates across the board and across the, not only the U.S., but developed nations, Europe, UK in particular. What do you have to say about, the increased savings across the globe?
So, yeah, savings rates have spiked during this coronavirus thing. A lot of people, I guess you would expect that since people aren't out there spending in the economy. But, people were worried about inflation. And if inflation is going up, then people need to spend more of their income because things are getting more expensive. This article from the Financial Times is saying, no, the savings rates are increasing. So in Europe, it went from 12% to almost 17% in the first 3 months. So this is right at the beginning of this crisis, not even the second quarter where all of the kind of economic problems hit. This is just from the first 3 months of the year. It already went up 4 percentage points savings rates in Europe. And then in UK, it went up 4% from 5 to almost 9%. And the US was the big number here. It went from 8% savings rate to 32% savings rate in the first quarter of this year. So my belief is the economy was already going down. Like we had problems in September with the repo market. The economy was slowing down with a lot of the economic numbers. And this first quarter print here for the savings rate shows that, yes, the coronavirus stuff affected it, but it was already headed that way because in the first quarter, we didn't really have a huge impact quite yet, just at the end of that first quarter.
I mean, we started to see images from China in January. People definitely weren't taking it that seriously quite yet. People weren't really talking about it. So that does indicate that greater systemic issues were being felt even before the catalyst that is coronavirus hit, and people were saving a lot more. In my eyes, at least when coronavirus became a reality, I personally started stashing cash much more aggressively than, I was always a saver. I think that's why I'm in Bitcoin, because I'm into personal finance and saving. But like my saving got a lot more aggressive, and I was actively trying to cut my spending. And then I think that that's something that a lot of people have also experienced. And I think going back to talking about stocks going up or other assets going up or the market performing well, these assets are now like the new pseudo savings technology. And while that might not sound like that kind of sounds like everyone already knew that, because that's what, your 401k and your IRA and all this stuff, it's like save in the market. So it's not that groundbreaking of an observation, but just understanding that US dollar and savings account don't work for savings for most people. Like stocks are a much better savings technology. And I think that they're being ballooned with store of value. Store of value is pouring into stocks right now. And it's just really interesting to see.
So if you think about like in the 80s and 90s, interest rates were up there at 10%, right? You could buy a CD at your local credit union and get 8% return on it. Why would you ever go into risky stocks? You can get 8% from your bank. And that's why the stock or the bond market is so much bigger than the stock market. But as rates kept going down, people had to find that yield somewhere. And so they started going more and more into stocks or into more risky bonds. So we talked about the Fed buying these junk bonds, right? And some of these junk bonds are yielding like 3 or 4%. So even there, the big money can't find any returns, even in junk bonds. So they have to go into the stock market. I don't believe that all of that the stock prices are that separated from reality. They are, of course, a little bit separated from reality because the Fed, there is some action happening there. But it makes sense. If interest rates are going lower, there's a deflationary environment. People can't get yield in bonds. So they have to go into savings, or they have to go into stocks. And now they're starting to go into gold. Gold is going up. Bitcoin, of course, is still a small player, but it's getting bigger and bigger. I think after this next wave of Bitcoin, it's going to become right up there with gold. It's going to be mentioned in the same breath as gold after this next rally.
Just a slight observation I had right now is most people interact with the stock market, with a wallet app on their phone or with like an interface on their computer. So the fact that people in mass are being primed to storing value in a digital number on a screen, I think is extremely bullish for Bitcoin. Like this store of value seems like it's liquid. It's moving, or like this value is moving from assets to assets. And it very well, this, use case of store of value and this desire and need and value that needs to be stored globally, like that can move to Bitcoin. And I'm just seeing like the path being paved for that.
There's a lot of work to do because there's no transaction bottleneck with those third-party apps, right? So we don't want everyone to have a third-party app to use Bitcoin, but that could be a stopgap. If everyone's owning Bitcoin, then there will be a lot more demand for protocol development on Lightning Network or open source wallets and that kind of stuff. So I think what comes first, the pump or the development? I think probably the pump comes first, and then the development comes after that. We haven't seen anything yet. I mean, we've seen a ton on Lightning Network and with a lot of these decentralized layer twos and things, but we haven't seen anything yet, because once Bitcoin gets over like $2 trillion market cap, I mean, the incentive is going to be out of this world to build this stuff and get it moving because people are going to demand it.
Yeah, absolutely. And not to refer back to past work, but the Bitcoin Tina special, we really get into that concept in depth. Is price is the leading indicator. Price is what tells people what to focus on and what to care about. And as Bitcoin's price goes up, more companies care about it. Fidelity did not pay attention to Bitcoin until the first bubble, and they didn't publicly start really start investing and becoming a face in Bitcoin until the 2017 bubble. So it takes these bubbles to bring in the attention, and then that attention brings in investment into the actual underlying technology. But speaking of the underlying technology, do you want to jump to Bitcoin? I guess we could talk about the dollar really quick.
Yeah, so the dollar's kind of struggling here a little bit. The listeners probably know I am not a dollar bull, but I'm dollar positive at this time. I think we're in a deflationary environment, so I think the dollar should go higher. But right now, it's breaking down. I closed my chart to save some bandwidth here on this call, but it is breaking down below 96 on the DXY, and it could go lower. Now, this is also a comparison between other, fiat currencies. If we look at Bitcoin is going up. That means the dollar is going down versus Bitcoin. Gold is breaking to 8-year highs right now today. So that means the dollar is getting weaker versus gold. A lot of commodities have turned around. They kind of bottomed there in March and April, and they're turning around. So it looks like either this is a real nice bear market rally, or it is a inflection point, and now the dollar is going to get weaker from here. But we'll have to watch it over the next couple of weeks to see, probably next couple of months, to see how where the dollar decides to go.
So I guess not to put you on the spot, but predictions: dollar versus other fiats, and then dollar versus stocks and commodities.
I'm still squarely in the dollar positive camp. I think it's much, much stronger than any emerging market currency. It's much stronger than the euro. The Chinese yuan, I think, is going to be really hit hard. I've been doing a lot of research and reading on the Chinese situation right now, and we probably don't have time to get into that very deeply, and I didn't take any notes. But it is China is going downhill fast, so I think their currency will probably weaken. The euro is really bad. So yeah, long term, next year or two, I still think the dollar is going higher.
Well, let's transition to Bitcoin. We had a little bit of a breakout this morning, pumped from 9,100 or whatever to 9,400. I mean, I guess it was kind of going up a little bit yesterday. I don't personally pay attention to the price that much. Yeah, I mean, what do you have to say about Bitcoin since last week?
It looks like a big move because it's been slowly trickling down over the last month, but it really isn't that big of a move. It feels good though. We were talking right before the show, like people kind of get depressed in Bitcoin when the price just keeps ticking down. But when we have a good, nice green candle, people's moods seem to pick up. So I have noticed that in the last 24 hours, really, in my community and on Twitter and things. I think the deflationary spiral from the halving that people have forgotten about already. Can you believe that? It's only a couple months ago, and it's like old news. But that is starting to kick in, and so slowly but surely, we will feel that pressure to go north.
I'm waiting for it. I'm excited for it. What is your thoughts of like Bitcoin price being correlated to stocks at all? Like, do you still think that they're correlated, or what are the conditions where we see correlation or not correlation?
I think Bitcoin is fundamentally uncorrelated with everything. So I don't believe in a lot of what Pompliano says or agree with a lot of what he says, but I do agree that it is an uncorrelated asset. I think at certain periods, you'll see a correlation, but over the long term, it's almost nothing. There's almost no correlation whatsoever. I mean, maybe with gold, there will be a correlation in the future, but not with stocks. I don't think so. My kind of vision for stocks, if you care, is over the next couple years, very slow rise in stocks. And Bitcoin is going to break out, and a lot of the dynamism and the growth of the world, people will start looking to Bitcoin for that versus, stock market and what is the newest IPO and all that stuff. I think people will look at Bitcoin for this new parallel economy. So there won't be much correlation because I think it is a completely separate economy, and that is going to grow over the next few years.
Definitely the best case scenario for sure. Well, speaking about the Bitcoin system, one of the most prominent aspects of the Bitcoin system is mining. And we've seen last week hash rate was flat. This week looks like it's going to go up by 8% in the next 4 days. It seems to me, based on just like hearsay from mining pundits on Twitter and stuff like that, that things are healthy, things are bullish, people are optimistic about Bitcoin mining. Do you have anything to add there?
I agree. Mining is very bullish right now. I didn't pull any links for this, but we'll have to touch on it in another episode. The mining in the U.S. is going crazy. Remember that was like a couple weeks ago. There was a story about some mining company here, new mining company in the United States bought like 17,000 rigs from Bitmain. I mean, it's the hash rate in the United States is going to go up, and pretty soon. I mean, we've talked about this, or Bitcoiners have talked about this for a long time. That I think I might have heard this from you originally. That this is going to be an issue of national security is how much 100%. Hash rate, that you 100%. Have here. So I think this is a really interesting. It totally ties macro and money. It ties everything in that we talk about here on the show. Mining ties that all in. So it's a good thing to talk about.
Yeah, we should talk about mining more. And personally, I'm passionate about mining. I think mining is, if Bitcoin sound money is incredible, distributed proof of work is just a sliver under how incredible sound money is. It's going to revolutionize everything. It's going to completely revolutionize the grid. The dollar is the oil dollar, where Bitcoin is like the pure energy currency. Mm-hmm. It extracts energy from everywhere in the most efficient way possible and turns it into money. And I think that connection is just gonna really bring Bitcoin full circle as a global, not only as like a global money, but also as a global commodity, also as something that just tethers every aspect of life together. So I don't know. I'm bullish, and I'm excited to see it come to the U.S. and excited to see it go to other places too. I want mining everywhere.
Yeah, I totally agree with everything you said there. It's just beautiful, right? Bitcoin is full of all these different pieces, and without every single piece perfectly balanced, it would fall apart. So mining is definitely, I guess mining was that last piece that got kind of worked on by Hal Finney, right, in 2006, 2007. And then, well, of course, you have proof of work from the Hashcash and stuff, but reusable proof of work came from Hal Finney just right before Bitcoin. So that was kind of like that last Lego. If you want to talk about money Legos, that was the last Lego to be put on Bitcoin that made everything tie together and work.
All right, Ansel, I think this is a fun show. We touched on a bunch of stuff we want to talk about more in depth. China, want to talk more about mining in depth. I mean, maybe even I'd be interested to talk more in depth about MMT and this and this UBI philosophy, just to understand the thinking behind that. So all good topics to have guests on for. So Definitely got to figure out how we're going to maneuver the format in order to work with guests, but definitely want to start adding that element into.
Yeah, well, we can, if we hit on different topics, like we want to talk about mining, we can invite somebody on that's, in the industry. If we want to talk about China, we can reach out to some macro think tank guy that wants to talk about China, and then we are responsible for tying Bitcoin in there. So that would be fun.
Yeah, let's do it. All right, Ansel, where can people find you?
Bitcoinandmarkets.com. My dictionary is coming out. It's full of Bitcoin jargon, 180 terms and explanations. That can be found at bitcoindictionary.cc.
Let's go. Pre-order the book. I already did. You can find me at CK_snarks. Make sure to subscribe to Bitcoin Magazine YouTube. Make sure to subscribe to Bitcoin Magazine podcast. Make sure to share this on Twitter. Do all the things. We really appreciate the support. And we're seeing some growth. So thank you for the effort, all the listeners, and keep it up.
Thanks, guys.
A quick reminder that all of the content in this episode is for informational and entertainment purposes only. You should not construe the information as legal, tax, investment, financial, or any other advice. Nothing contained in this presentation constitutes a solicitation, recommendation, or offer by BTC Media, the Let's Talk Bitcoin Podcast Network, or any third-party service provider to buy or sell securities or any other financial instruments. Do your own research.